Welcome to Lunch Money. Coming up, Bitcoin ETFs get approval. What does this mean for crypto? The premium bond prize fund rate gets cut. And did M&S, Tesco or Sainsbury's have the best Christmas? Hello, I'm Simon Lambert. Joining me on today's Lunch Money is This Is Money's Lee Boyce and Victoria Scholar from the show sponsor, Interactive Investor. Victoria, the news landed last night that the US securities regulator has approved Bitcoin ETFs for the first time. This was widely expected, but it could have gone the other way. What does the SEC decision mean?
Well, we've been waiting and waiting for this decision, and we actually had some fake news earlier in the week that it was already approved, and we saw some wild swings in Bitcoin over the week. Finally, the announcement has come out that the Bitcoin ETF is approved and buying and selling could start as soon as today. This is significant, of course, because it means that retail customers will be able to get access to Bitcoin in a way that they haven't done before. So that's likely to improve trading volumes and also just that general stamp of approval. And so we haven't seen really much of a reaction in terms of Bitcoin, but we know that it is, of course, a notoriously volatile asset.
I mean, this is probably the biggest news to happen to Bitcoin in the last few years. The price has barely moved. In an asset, if you want to call it that regularly swings around by 5 or 10%. Why hasn't it gone up?
It's interesting because I would have expected some kind of upside today, given the size of this decision, like you say. I think if we look back at how Bitcoin has been performing over the last 6 months or over the last year, it's up by 50% over the last 6 months. So it's a case of travel and arrive, or buy the rumour and sell the fact. A lot of that news has already been priced into Bitcoin ahead of today's announcement. So perhaps there was some profit taking as investors sold off so they don't have to hold the event risk as it comes. But I think essentially a lot of it has been priced in already.
And I mean, this is a difficult question. Does this make Bitcoin a safer investment for people, or do they still need to be wary?
I think investors still need to be wary at this point. In terms of the price action that we see, traders can enjoy incredible gains, of course, but they can also nurse extremely heavy losses. So it's not for the faint-hearted and should probably only make up a very small part of an overall portfolio.
Thank you very much. Now, to a much safer investment that could still make you rich quick, although that is very unlikely to happen, premium bonds. These are hugely popular, but that seems to have become a bit of a problem, and the prize fund rate has been cut. Lee, what's happened? What does this mean?
Yep, so the prize rate has been cut from 4.65% to 4.4%, so that's what you would get with average luck over the course of a year. It's the first cut for some time. There were 6 rises in premium bonds last year. In January 2023, they started the year at 3%, ended the year at 4.65% when they were risen in September. But since that rise in September to that 4.65% rate, £1.3 billion has flowed into premium bonds. So that's more money than what's been withdrawn, just showing how popular it is. In fact, last month alone, there was £537 million that went into premium bonds. That higher rate has teased more people into getting it. But this cut, now you look at it and you compare it to the best easy access rate and it doesn't look as attractive. Obviously, very different products, but you can get 5.2% on easy access. People might be questioning whether now is the time to exit some of their cash from premium bonds.
And this has come just as premium bonds are having a TikTok moment, hasn't it? They're all the rage with the kids.
That's it.
What's going on there?
Well, it all blew up on Twitter. People were looking at the small amount of holdings that are winning big prizes. So, and that's what can happen. But the thing is, people hang on to that. So you've got 2 £1 million prizes every month. Then you've got some £100,000 prizes and some £50,000 prizes. If you've got a couple of £100 in holdings and that wins you one of those bigger prizes, your prize rate is far higher than 4.4%. And that's what kind of blew up on Twitter. People couldn't quite believe the return on some of this. But we've been talking about this for a very long time. We always pick out the little gems in that. But you could quite easily also come out of the year with earning 0%. So that's the trade-off. That's why people love them. It's that kind of being in it to win it without really risking your money, because you can take your cash out at any time. But the number of prizes, Simon, for those sort of chunky prizes are going to be cut from the March draw. So, for example, there was 91 £100,000 prizes in the most recent draw. That's going to be 85 from March. £50,000 prizes, 182 in January. That's going to be 170 in March. There's going to be way more £25 prizes. The reason why they're doing that is to keep the odds from a single bond winning at 21,000 to 1. This time last year, the odds were 24,000 to 1. So there's still reasons to be involved in premium bonds, but I think this will give people more food for thought.
Okay, thank you very much. Now, in other markets news, we've had 3 big names deliver trading updates that cover the festive spending spree: Sainsbury's, Tesco and M&S. Victoria, which one won Christmas?
Well, ahead of today, I would have thought it was going to be M&S. That's what everyone was expecting. M&S has been having this huge turnaround plan. It's been revamping its store estate. It's been doing much better in clothing and home, which typically lags its star-performing food division. But actually, we saw that after some strong sales over Christmas, M&S shares fell today. So I think there's been some profit taking on the stock. Tesco, however, raised its earnings outlook for the second time in several months. And it also reported some pretty strong sales. It is, of course, the UK's largest retailer, and it's the only one of the 3 that actually enjoyed share price gains after its results. So perhaps Tesco is the winner in terms of today's share price reaction, at least.
But overall, in terms of the update, it looked like M&S had a pretty good Christmas and the recovery is still on track.
I'd say M&S is probably still the standout winner in the sector, just in terms of its incredible run for the shares over the last year, and also some of those big changes that it's making. It's focusing on those larger department store style shops and getting rid of a lot of those smaller stores. It's got an ad campaign with Sienna Miller, and the women's wear is doing particularly well. So there's a lot to be excited about when it comes to M&S at the moment.
Thank you, Victoria. Lee, there's been a lot of focus on loyalty card prices, hasn't there? And there's even a CMA investigation into it. We've had Sainsbury's, we've had Tesco. Are they getting a boost from the Nectar prices and club card prices?
Well, you would certainly say so, having a look at the results. I mean, they kind of pointed to the fact that Nectar card and club card prices have helped sort of boost the coffers. It's got more people spending in their shops. But the concern is from the CMA, which CMA investigation, here we go, which they announced in November and is meant to be starting from this month, is looking at whether promotions that are only available to those that sign up to loyalty cards is fair and what that's doing to pricing. Now, to get a loyalty card, you have to give up a lot of your personal data. Some people don't feel comfortable with doing that and don't want to do that, but they're being penalised when they're going to places like Tesco and Sainsbury's, because if you don't have one of those cards, you are going to have to pay more for some products that they mark up on these special discounts. And the CMA is looking at whether that's fair and what that's doing to competition. So the jury's out how long that will take and what will happen next, but it's certainly the last 6 to 9 months, it has been a real big boost to Sainsbury's and Tesco in particular.
And that's because we're not just talking about, 20 or 30p off or 3 for 2 offers. The price differential has, with the Nectar prices and the club card prices, between if you've got a card and you haven't got a card, has got massive, hasn't it, for some things?
It's huge. And to be honest, sometimes now when you walk into the supermarket, you've really got to know your prices, because you see something that's gone on to a sort of a club card or Nectar price and you think that might be a great deal, but the likelihood is that might have been that price before, or, that's that kind of thing that the CMA are looking at. But you're right, if you don't go into these places now with a loyalty card, you could be looking at a difference between a 50 quid shop and a 30 quid shop, because you could be talking 30, 40% off a product, and it's shaping and influencing what people are doing in these supermarkets.
Well, we'll see what the CMA has to say about that. That's all for today's Lunch Money. You can catch all the previous shows by searching for This Is Money on YouTube, and if you are watching there, please do us a favour and hit the like button or the subscribe button, or come to thisismoney.co.uk/lunchmoney to find all previous episodes. And join us for our next show on Tuesday. Goodbye.